Does your life insurance give you any returns?
Returns? Life insurance? No.
Out of all the life insurances possible, I'm going to give you the best one. This one right here. Please surrender the one you have right now. This one will give you 10% return.
What?
Apart
10%? I'll sign it. I'll sign it.
Don't get too excited. You don't get involved, sir. This will also give you the life cover in even more than last time and the returns. Isn't that amazing?
Oh, amazing. Give me the pen. I'll sign it. I'll sign it.
Something obviously was wrong in this conversation. So we thought in this episode of De-Influencing, let's talk about, well, we have a special guest, Shrihit.
And in true de-influencing style, we will talk about the ugly, the good, the bad, and everything you need to know about life or term insurance as we like to call it, because Mr. Raman will never tell you all of this.
Here are 5 hidden tricks to buy the best life insurance there. Not only will this cover your loved ones and your family in case of your demise, it will also give you returns. So let's start with step number 1. Trick number 1. If you are young, then you can save on life insurance premiums by not getting it. Because you don't have dependents, your family is already earning and you're young. And you are already earning for many years, so 5 years you'll save the insurance premium.
That's actually not true. Because even though you may not have dependents right now, there's no guarantee that you won't have dependents in the future. Most people tend to get married between the ages of 25 and 35, and if you are one of those people, you'll quickly see that your spouse may be dependent on you, or your kids. They may need help with education, they may need help with growing up, and generally, they are your dependents. So if you tend to buy a life insurance or a term insurance policy early, you tend to get lower premiums. Also, you tend to lessen the risk of rejection, because after 30, you may have lifestyle diseases like diabetes, blood pressure, etc. And insurance companies may deny your application altogether, at which point you may not even get a policy.
Okay, fine, but Shrihit, think about it. If I'm 25 for 5 years, if I don't buy any insurance, I saved 5 years of premium, no?
Yeah, but then again, you also save premiums by locking in your premiums early by buying early.
What is that?
If you buy early, your premiums are lower and they get locked in, which means your premiums will stay the same until the policy matures, which usually...
Okay, I didn't know about this lock-in. But here is trick number 2. You must have heard about ULIPs. But the new kind of ULIPs, which I'm going to tell you, will change your life. They not only give you life cover, they also give you very good returns. So here are the life...
I know that there are plans right now, especially ULIPs, that actually probably give you decent returns without a lot of charges. But the thing is, even those plans, the best plans in the market, you could take them and you could simply compare them to a simple mutual fund plus a term insurance plan. Okay. So instead of just putting all your premiums in one ULIP plan that promises better returns, you can just separate those premiums, pay for a life insurance plan, a term insurance plan separately, and then invest your money directly in mutual funds. So you have to pay almost no charges. So that's still a better alternative.
What returns are these ULIPs giving?
They probably give you somewhere around 5-6%.
Oh, I didn't know that.
Yeah, because...
And index funds like 12%.
Yes, I mean in the long term you could probably make more without the excess charges. Even those low charges plan actually promise you.
I did not know that they give that, but I think we should talk about another thing. See, I'm paying all these premiums, Shrihit, and I'm sure you didn't know this. All this premium adds up. I'm paying every year. Correct? It's an expense.
Yes.
I can do so much with this.
Yes.
What if I selected, and we're at hack number 3, where you can add something called a rider, which gives all that premium back to you once the policy ends. It's very simple. You're paying the premium, and then at the end, you get all the premium back. Isn't that perfect? So if you don't die, you get the money back. That's not bad. No, and there's a link in the description.
Wait. The return of premium plans may look good on paper, but technically they still don't make financial sense. Because even though the insurance companies promise to pay all of your premiums back if you survive the tenure of the plan, do know that they won't return the GST. Also, if you're looking to buy a plan that promises to return your premiums at some point in time in the future, they also tell you that you have to pay a higher premium when you buy a plan right now.
Give me an example.
So, if you're buying a regular term insurance plan, you may be paying, say, 15,000 rupees. But if you want to buy a plan that returns your premium after you survive the tenure, then you may have to pay somewhere between 20 to 25,000 rupees, which if you think about it, you can just put all of those extra premiums in a separate index fund and make as much money or even more money than the premiums you get at the age of 65.
Then why was I saying it's marketing? We'll cut this. Just cut this, wala. But you know, there's one more trick. You know, the other day I went to the mall and I was at one of these stores and I had to buy a phone. तो पूरा पैसा नहीं था phone का. So they said no worries, take a no cost EMI option, where basically I didn't pay any interest and I was able to take it. Now there's also the same concept in life insurance. It's called a zero cost plan, where basically all the premium that I paid will come back and I'm not paying the extra premium I paid in the other one that I showed. So 15 का 24,000 नहीं होगा. Normal premium. It's normal premium and you get it back. So I think this is pretty...
No. I get that zero cost plans are also very good on paper, but the problem is, see, when you're buying a zero cost plan, you may not have to pay the extra premiums. However, insurance companies will force you to forego your plan even before the tenure ends.
Wait, 1 minute. So you said when I turn 50 or something around that age, I have to surrender the plan. Which means if something happens to me after 50, I cannot get that benefit.
You won't have the term plan to get any benefit.
No, that's cool shit, but I want to talk about another feature about all term insurances, and those are riders. So for example, there is one rider called terminal illness. Now this rider basically covers if the doctor tells you that you are terminally ill, which means you can pass away in the next few months, that entire sum assured is given to you while you're alive. That's right, while you're alive, and you can use this money any way you see fit.
Yeah, I mean, it makes sense, and obviously receiving the sum assured, which could add up to 1, 2, 3 CR for most people, looks enticing on paper, but there is a catch.
Okay.
See, before releasing the corpus, the insurance company will ask your treating doctor to provide a certificate that states that you're likely to die in the next few months. And I'm guessing that your treating doctor will never do that because he'll believe that no matter how grim the chances are, you may survive. Instead, I suggest something else. I suggest you take a critical illness rider because that makes more sense for
Yeah, it's okay. I'll explain the critical rider then. ठीक है, terminal illness. But a critical illness plan is interesting because अगर कुछ serious हो गया आपके साथ, you will get a sum assured that you've already pre-decided while you were taking the insurance policy. Now, imagine pulmonary heart disease. आपको मिल गया, but why should you waste money on this rider? You may not know this, but a health insurance will cover it. So you don't need to actually take this.
Pratik, it doesn't work that way. See, the thing about critical illnesses is that while a health insurance policy pays for your hospitalization expenses, you have to consider what happens about the loss of income. When you have a critical disease, say cancer, and you're in a hospital, you're likely to not be working. So you will likely have to quit work. And if you're quitting work, you have to think what happens to your income. If you have no income, how will your dependents survive? How will they deal with the vagaries of life? So my suggestion is to buy a critical illness rider with a term insurance plan because you can use that money, say 10, 20, 30 lakhs, and replace your lost income. And that makes a lot more sense than simply relying on your health insurance plan.
And which is why a critical illness rider is important in a term insurance.
Yeah, I mean, that's simple. That's exactly how you put it.
So now I'd like to talk about how you can save your premium with the smoking bit. I'm sure you've heard about this. If you're a smoker, you'll pay this much premium. If you're a non-smoker, you'll pay this much premium. Now, here's the trick. If you haven't smoked in the last few weeks, I'm sure you can control it. Simply don't tell when you have the test. Even if they take the blood test and do all the tests, the nicotine won't show up if you've not smoked for the last few weeks. Which means you will save your premium from this to this. Isn't that amazing? Are you impressed?
I'm not quite. Because the problem is, even though it makes sense not to declare it and pay the lower premiums, there is still a way for insurance companies to figure out if you've smoked or not. So let's suppose we take a use case. You've smoked in the last few weeks, you don't declare it because you don't think the nicotine test will show any abnormalities, and you get the policy issued. And then unfortunately something happens to you, say a few years down the line, and you pass away. It's not to say that the insurance company will immediately disperse the claim. See, actually what happens is they'll do a thorough investigation, and at any point, if they find even the remotest evidence, even a Facebook photo, a long,
That's not true.
Actually, we know of companies that actually send out people to investigate everything, your social media profiles, every relative you know, your school friends, everything that they can find, because they're paying out crores. So they will invest the money to make sure that they don't pay out claims.
And they use it as evidence?
Yes, and if they can find evidence to categorically show that you've smoked in the last few weeks during which you made the declaration, then they have grounds to deny your claim. So I don't think you should be lying on that front either, just to save the premiums.
So I have no more tricks up my sleeve, but what I do have is a checklist. I hope you like this format. If you follow this checklist, you can select the right insurer. Now, a policy can be quite nuanced, but selecting the right insurer is really important. So let's start with this 4-point checklist. We've also added all of the details in the description. Number 1 is the claim settlement ratio. Now, very simply put, the number of claims versus the number of settlements. So if there are 100 claims, how many of them were actually settled? A good insurer would have 98-99% claim settlement ratio. You can find this in the annual report of AIRDAI's annual report. Over there, it includes all of this. We've included a link in the description to that annual report as well.
And the second ratio is amount settlement ratio, because it's very easy to game the claim settlement ratio simply by paying out 9 claims and then denying that one claim that is very, very expensive. So 9 claims worth 1 crore, I'll pass all of them, and then there's one claim that's worth 10 crore, I'm going to hold on to this. So it's important to look at the total amount settled ratio, because it also tells you the total amount settled versus the total amount claimed. So a number between 90 and 95 is usually good, and we believe that that's what you should do if you're considering your insurer.
Checklist number 3 is number of complaints or volume of complaints. This may be interesting because there could be a good claim settlement ratio, but you also want to see how many complaints it's receiving. If their insurance agents actually missold the product, the volume of complaints is likely to be higher. Now, there could be a number of reasons for this, but basically, you don't want the number of complaints to be higher for the insurance provider you select. This is on a base of 10,000 claims to basically normalize this number and make it easier to understand. Make sure you find this on the insurer's website. You could find it in different areas. You'll have to do some snooping. It could even be in the investor presentation in the investor section, but you will find this information. And you can compare and see where the volume of complaints is higher and where the volume of complaints is lower.
And the final thing that you have to look at is the scale of business, because it's very easy for me to sell 10 policies and settle one claim because I've only received one claim and claim 100% claim settlement ratio. But it's very hard to do this on a base of, say, 1 lakh policies, right? So you have to look at the scale of the insurance companies and how long they've been around, because if they've been around long, you can trust that they'll be around to pay your claims as well.
Super. I hope you found this interesting. Shreet flew all the way from Bangalore over here just to discuss it. So no money exchanged hands, correct? And never will. And we just thought he understands this topic so much better than we ever would, which is why he was here helping us with this piece of content. Now, I'd recommend if you thought this was interesting, visit Ditto. They have a free consultation. Check it out. Understand about your policy, have some questions and understand it. So it's the least we can do for you for coming all the way here.
Okay.
And if you have any questions, you put it in the comments below. Shreet will answer them because I don't know enough. And I'll see you in the next episode. What's the next point? I think this came out pretty well.
Yeah. Very good, yes. The points are so good.
Premiums back without asking you to pay the extra premium in the beginning.
Sorry, I zoned out.
So return of premium plans